Last week was all about inflation, which we talked about. Consumer inflation came in at 3.7%, which was still higher than projected and still really far away from the Fed's 2% overall inflation target. Too many people on TV just fan the flames of market optimism, completely void of any recollection of economic history. In the past, we've seen inflation weaken as an initial sign of progress, only to rear its ugly head again right before deflation finally kicks in and wrecks a bunch of stuff in a lot of sectors of the economy. This is showing those same markers, but okay, maybe it's for different reasons. I agree with that. And fine, those of you who are asking, why isn't he talking about PCE, which is the Fed's real marker for whether we're making a dent in inflation? Well, it's still positive too. And until it starts reporting zeros in growth or even some negative numbers, we're still in a month-over-month ascending line chart. By the way, I'm willing to bet that Fed members were probably aware of this during their Jackson Hole Symposium meeting recently. Remember, a number of them hit the press stating that they're prepared to raise rates higher if they need to, and then hold them there for longer? Maybe it's time we start believing what they're saying. If anything has a chance of making the Fed pause rate hikes this week, it will be softening jobs data. As we've been telling you, they want to see 4.5% unemployment rate, which is a combination of increasing numbers of Americans hitting the jobless lines at the same time that companies are telegraphing hiring freezes and making less new jobs available. Look no further than the most recent JOLTS report that was 700,000 less jobs available than the previous month. And don't even get me started on the hundreds of thousands of combined tech layoffs that happened this year. Maybe you even forgot about that because they've drifted off into the furthest recesses of the news headlines and collective attention span. And while weakening unemployment is bad for the economy, it's actually good for the Fed, which somehow is also good for the economy, but on a much longer time frame than we're probably going to be comfortable with. September 20th will either be a huge day for the Fed or a massive disappointment that forces everyone's attention onto their November meeting. If they need to take more action, I'd honestly like to see them do it now rather than whack the economy one more time in November right before the holiday season. At this point, opportunities in the real estate market need to be looked at the micro level, meaning your specific scenario and what will help you advance your real estate and mortgage goals. Yes, we know that certain market conditions like lower rates, reduced home prices, and more inventory will help more people. But you know what? This is the time that maybe you have to compete against you. What do your life circumstances call for? Is renting still in your future? What are you capable of doing that can help you increase your income, decrease your debt, and raise your credit score? Let's start digging in and going in after our personal financial goals like they mean something, and let's go hit those goals. So with that, let's take a quick look at what's coming up in the markets this week. Tuesday, building permits and housing starts both come out. These are both critically important to real estate and a mortgage, but we need more inventory any way we can get it. And with existing home sales really coming up short this year, our hopes for more buyer options in housing in 2024 will really come down to these batches of data. Hey, builders, we're watching and we're hoping you step to the plate with more homes in the new year. Wednesday is the biggest day of the week, month, and maybe even the year. Yeah, you've heard me say that before, but honestly, this is the one. Jerome Powell will announce the Federal Reserve interest rate decision, give his prepared remarks, and hold a press conference. Will they hike or will they pause? If they hike, what will they tell us about that decision? And if they pause, can they tell us that we're finished or not? Thursday, unemployment claims, Philly Fed manufacturing index, and existing home sales all come out. This is mostly par for the course on this one, but let's keep an eye open for any surprises. Friday, flash manufacturing PMI and flash services PMI both come out. And that's it for this week. Remember to like this video, subscribe to the channel, and turn on notifications so you catch every episode.